To begin with, let's talk about that. You need to open a 15-minute chart. The system is intended to be traded on the 15-minute charts. On that chart, you draw a vertical line at the 1400 time, and we're talking Greenwich Mean Time here. So we draw a vertical line at the hour 1400. We draw another vertical line at the hour 1600, and again, Greenwich Mean Time is the time zone that we're using. And then we draw a horizontal line at the high price point of that time frame, and we draw a vertical line at the low price point of the time in between that time frame. So we're going to draw 4 different lines on the chart. Instead of using indicators, we're just going to draw some lines with this system. So just to show a clearer example before we move on and show you this in MetaTrader, we're going to open a 15-minute chart, and then we're going to draw 4 lines on that chart. We're going to draw a vertical line at the 1400 hour, so straight up with just a single click in MetaTrader. I'll show you how to do this in just 1 second. We're going to draw a vertical line at 1600, again just a single click. I'll show you how to do that in a second. And we want to draw a horizontal line at the high price point, so in this case it was 1.34870. We just draw a line there, and we draw another horizontal line at the low price point of the time in between those 2 lines. So again, just a single click. Let's show you this in MetaTrader, and then we'll move on and talk about the rules of trading. Okay, so just to show you in MetaTrader itself, when you open a chart window, we've applied our white template to it by right-clicking on the chart, selecting template, and clicking the white charts that we saved before. Now I just want to zoom in a little bit. I'm going to find the 1400 hour on this chart just to show you how to do this. Preferably you would be doing this just after this time frame occurred and setting up your orders at that time. But here we go, we've got the hour 1400 and we've got the hour 1600 right there. So we need to draw a vertical line. So we're going to click the button up here to draw a vertical line. And on the black line above 1400, we're just going to center our little cursor there and click. And now we have a vertical line. And again, we need to do this again at 1600, so we click the vertical line button again up here, and on the next black line right there, we're going to click, center our cursor and click, and this should be on a 15-minute chart, not a 1-hour chart, so I'm just going to switch that. And then just scrolling back, there's our lines 1400, 1600, and I switched it to a 15-minute chart, which is what you should be trading with this system. And then we need to draw some horizontal lines. To do that, we click the horizontal line button right up top here. And then we take it over here and we just center the crosshair of this cursor over top of the top price point in between those 2 time frames, which is this. And then we do it again, draw a line at the bottom, and the low price point in between these 2 lines was right here. So now we have 4 lines on our charts. We have a vertical line at 1400, a vertical line at 1600, and then we have a horizontal line at the top price point. In this case, it was 1.43302, and we're looking at the Euro CHF in this case. You wouldn't actually trade that chart with this system, but it gives an example. And then we have another vertical line or horizontal line at the low price point in between this time frame, which is 1.43152. So once we have that, we're then ready to learn how to trade with this system. Okay, so now that we have our chart set up, we need to look for the trade. To do this, we calculate the distance between the top horizontal line and the bottom horizontal line, and we're going to calculate that in pips. So all you would do is subtract the high price point from the low price point. And if there is less than 50 pips between the 2 horizontal lines, it's an opportunity to trade. If there is more than 50 pips between the 2 horizontal lines, skip trading that particular currency pair this day. What we're looking for is we want to trade the breakouts on a consolidation. So the price has consolidated a bit. It hasn't moved more than 50 pips in that particular time frame. That means it's about to break out in one direction or the other, or it very likely is. So let's just take a look at a couple of examples of what I mean. Here's our charts like we just set up in MetaTrader. We've got our vertical lines at 1400 and 1600, and we've got our horizontal lines at the low price point and the high price point. So to calculate whether we want to trade here or not, we subtract the high point, 1.34870, from the low point, 1.34331, and in this case that equals 0.00539, or 53.9 or 54 pips if you wanted to round it up, which is more than 50 pips, so we don't want to trade this day. We leave this trade alone. Looking at the next example, here's another chart where we've done the same thing. We've drawn our horizontal lines and our vertical lines, and again we subtract the high price point 1.06225 from the low price point 1.05877, and in this case that equals 34.8 pips, or 0.00348, so 34.8 pips, which is obviously less than 50, so at this point we would make the trade. When we find an entry signal, which we just did, we place a buy limit order at the high price point, and we place a sell stop order at the low price point. And when we set these orders, we're also going to set a stop loss. The stop is going to be set to the same level as the distance between the high and low. So for example, if we calculated there was 34 pips between the high horizontal line and the low horizontal line, our stop loss would be set to 34 pips. Our take profits with this system are going to be set somewhere in between 40 and 80 pips. It depends a little bit on the currency pair and the distance between the high and low point. If it's closer to that number 50, it's more likely to break out and move more than 50 pips, so you might want to use a higher take profit level. If it's less than 50 pips, closer to 30 pips in between the two lines, then you might want to use a number like 40. You'll get a feel for this as you practice with the system. When you're just starting out, if you just want to use a number like 50 pips as your take profit level, that's conservative enough and it will work. And then obviously, since we're setting stop losses and take profits, once we're in the trade, everything is automated. We cancel the other order, so we've set our order points ahead of time. The currency pair has moved in one direction or the other and broke out. One of our orders is triggered. The first thing that you should do is cancel the other order. You wouldn't want to be in two orders if it for some reason turned around. And then we let the trade run. Either the trade will move in your favor and hit its take profit, or it won't. Usually, hopefully, you're hoping that you'll hit your take profit level and you'll have a profitable trade. But if it went the other way, obviously you'd stop out. We've set both a take profit level and a stop loss, so all you need to do once a trade is entered. Okay, so taking a look at a trade example here. This one is on the British pound US dollar chart, and we're looking at the 15-minute charts. This should always be traded on the 15-minute charts. It's just after the 1600 time frame, so we need to draw some lines here. We need to draw, first of all, a vertical line at 1600, and then we need to draw a vertical line at 1400. So using the vertical line tool in MetaTrader, it's just two simple clicks to do that. We grab the vertical line tool and click, and now we have our two vertical lines. We also need to draw horizontal lines at the price points, the high price point of this in between this time frame and the low price point in between this time frame. So we get the horizontal line tool and click at the high point, and we get the horizontal line tool and click at the low point. So now we have our horizontal lines, and that actually is off just a little bit. I'll just show you how you can adjust a line if you don't get it in the right place. You can right click on a chart, click click object list, and the last line that you added will be on the bottom. So we're just going to edit this, and we're going to move it up 1 pip so that it's right below the bar. So I just changed that from 3.4 to 3.3, and there we go. So now we have our high point, our low point, and in between those two lines we need to calculate the difference. So we're just going to use a calculator to do that, to find out if this is a good place to trade or not. The expectation here is that once the price moves past this point, it's consolidated a little bit, it's either going to go up or down, and in either case, if you catch it on the breakout, it's an opportunity to make some pips in a fairly short period of time. This order points that were set are only good for a day, but first let's just calculate this. So we've got 1.5067 as the high point, minus 1.5033 is the low point. So we've got a 34 pip spread in between these two lines. This is a good place to place our orders. So we would place our buy order on this line at 1.5067, and we would place our sell order at 1.5033. When we put these orders in place, we set them so that they automatically get hit when the price moves past the point of entry, and in this case we would have set our orders. We would have set our stops at the same distance back as the spread, so 34 pips in between these lines. We would have placed our buy order here with a 34 pip stop. We would have placed our sell order here with a 34 pip stop, and then as this currency pair moved forward, it did break out, it moved up, and we would have set our take profit level on this order here at 50 pips. We might actually set it a little bit higher as you gain more experience with this, but in this case it would have moved up. We hit our 50 pip take profit level a couple hours later, so this order was a nice profitable order, and that's one example of how this system works. And let's take a look at a couple more examples. Okay, taking a look at another example here, I'm looking at the Euro US dollar on the 15-minute chart, and the 1600 hour has just passed. So we draw our lines. I've drawn these already. I drew a vertical line at 1600, and I drew a horizontal or another vertical line at 1400, and then I drew a horizontal line at the low price point in between those two time frames, and a horizontal line at the high price point in between those two time frames. So just to calculate this out, 1.33618 is the high point, minus 1.35956 is the low point, and that's 22 pips difference. So I would set that means we can trade there's less than 50 pips difference between the top line and the bottom line, so it is a good point to trade. So we could set a buy order for the top line, 1.3618, with a stop loss at 22 pips behind at the low point, and we could set a sell order for the low point with a stop loss 22 pips behind, and then the price is going to likely move in either one direction and trigger our order. And in this case it did. It triggered our order right away on the next bar actually, and the order was entered, and we set our take profit level for 50 pips, and that was also hit just about 45 minutes later. So another successful order, quite profitable in a short period of time. And even if our take profit level hadn't been hit, the order would have continued for a day and still hit the take profit level. So again, another good example. And let's look at one more trade example before we're finished with this. Okay, so looking at another trade example here, I'm looking at the Australian dollar, US dollar, this time on the 15-minute chart, and I've drawn my lines. I've drawn my vertical line at 1600, my vertical line at 1400, and then I've got a horizontal line at the low price point and a horizontal line at the high price point, and I've taken the time to calculate that. 0.9125 is the high, minus 0.9094 is the low, so there's a 31 pip spread in this case. So I set my buy order just at the high point, and I set my sell order just at the low point, and again I use a 33 pip stop on this one, and I would probably use a 50 pip take profit level. And then this order actually triggered my sell order right away, and it continued on, and eventually about 4 hours later our take profit level was hit, and we exit this trade with 50 pips in profit. So another trade example, and another good trade example of how this system can be profitable. Hello and welcome to video 5 of your training videos. In this video I just want to talk a little bit about which currency pairs you should be using with this trading system, and I want to give you an easy money management system that will help you stay profitable. To begin with, let's just talk about currency pairs. This system is intended to be traded on the 15-minute charts, and it's intended to be traded with the major US dollar pairs. Since it works on breakouts after news releases, and trading anything other than a US dollar currency will have it won't work well. So the currency pairs you can trade with this system: the US dollar Japanese yen, the US dollar Canadian dollar, the Australian dollar US dollar, the euro US dollar, British pound US dollar, US dollar Swiss franc. Any of those currency pairs will work well. You might find as you learn some of these currency pairs that you need to adjust the time frame slightly for the different currency pairs. Maybe you find that the news releases are actually happening an hour earlier for the GBP US dollar, for example, so you might adjust the system like that. For the most part, you should stick with a currency pair that you know. Get started with one of them and practice it with one currency pair and then start using it with another currency pair, and doing so will help you to stay profitable in the long run. And next I want to talk about money management. Money management is an easy way for you to manage your risk and help to ensure that your account grows over time. The system that I'm going to give you is quite simple. We're going to simply take the stop loss for your trade. We're going to take a per pip value and the amount that you risk on the trade. We can calculate that from your stop loss. And we're going to use that information to vary your trade size and ensure that you're trading or risking the correct amount for your current account balance. So it's not a difficult money management system, but it is going to protect you from large account drawdowns. The first thing we need to talk about is simply calculating a per pip value. And the formula to calculate a per pip value looks like this. It's 1 pip with proper decimal placement divided by the currency exchange rate times the amount that we're trading. So the amount we're trading would either be 100,000 for a full lot or 10,000 for a mini lot. To give you an example using this formula, if we were calculating a per pip value for the US dollar Japanese yen, we would calculate that a per pip, or a pip with proper decimal placement, we know is 0.01. We divide that by the currency exchange rate of 92.52. We multiply that by the amount we're trading, and we're going to trade one lot. That's what we want to calculate the per pip value for. So the per pip value in this case is $10.80.87, or 10.81 to make the calculations easier. And from that, we can then calculate the amount that we're going to risk on any given trade. And it should be noted that when the US dollar is on the right side of the pair, so that would be like the euro US dollar, when the US dollar symbol is on the right hand side, you don't need to calculate, because a full lot is always going to be $10 per pip and a mini lot is always going to be $1 per pip. So the only time you need to calculate a per pip value is if the US dollar is on the left hand side of the currency pair. So with our per pip value, we now have the information we need to calculate how much we risk on each lot. So we can use our 1081, the number we calculated before. And if our stop loss was 50 pips, then for every lot traded, we would be risking 50 times 1081 equals $540.50. So for every lot we trade, that's how much we're going to risk. Then we need to know how much is an acceptable risk for our account. So we're going to take this number and use that in just 1 second. So let's calculate a trade size. We calculate a proper trade size from your current account balance. We always limit our risk to a percentage. Normally you would use 2%. You would never want to risk more than 2% of your account balance on any given trade. So if your account balance was 120,223, we could risk that number times 0.02%, your account balance times 2% equals 2404.46 in this case. As you grow more experienced as a trader, you might increase your percent risk to 3%. For most traders, 2% is an acceptable risk level, and it's good right from when you start through to when you're a master at Forex. So now that we have that number as well, we can calculate the trade size. We take our allowable risk, we divide it by the number that we calculated risk per lot, and that'll give us the number of lots that we can trade. So in this case, the numbers we calculated were $2,404.46. That was 2% of our current account balance. And we calculated that we would be risking per lot with that 50 pip stop $540.50 for every lot we traded. So we divide the allowable risk by the risk per lot, and we end up with 4.45 lots. And in this case, we always round down. So if you're using a Forex broker that only allows you to trade full lots, we would trade. And if you were using an account that allowed you to trade both full lots and mini lots, you could trade 4 lots and 4 mini lots. Again, we're rounding down. In most cases, you wouldn't be able to trade 4.45 lots. You might be able to trade 4.4. Rounding down ensures you always stay within your acceptable risk level. And just to give you some final thoughts as you're learning this system, before trading any Forex system, you should practice until you understand it well and feel you will profit from it. The more confidence you have in the systems that you're trading, the more likely you are to let your emotions get in on those trades and end up making them go the wrong way. When you're trading, always use a money management system. We just give you a simple system to use to calculate the proper trade size according to your stop. And when you're just starting out with this particular system, try sticking to one currency pair and learning it well with that currency pair. and then move on to another one. Sticking with just a couple of currency pairs rather than trying to trade it on 5 or 6 will help you learn how the currency pair affects the way that you trade as well, and it will help you stay profitable in the long run because you'll learn each currency pair well before you start trading it with your live account. So just some final thoughts. Other than that, this system should help you stay profitable. Practice it until you know it well, and then you will profit with the system as much as we do.